Well, hey there, YouTube. I'm doing something pretty exciting for you guys here today. I'm releasing literally the entire video I did yesterday in my private stock market membership group for you guys. This is a Friday video. We always do videos on Fridays where I discuss, different stocks I'm looking into, different stocks I own, the public account, the dividend account, and all those sorts of things. So hope you guys really enjoy this. This is just kind of like showing you guys, I get questions a lot, like what is the content like in there? And this is literally like what a Friday video is like for us, talking about different stocks and whatnot. On Mondays, I actually do teaching lessons where I go into like teaching people different things, and all videos are backlogged in there. So meaning like if you join, like you can watch videos I posted months ago learning different things from me and whatnot. After this video, if you're interested in actually joining my private stock market membership group, that is linked down there in the description. We love to have you part of it. We have over 400 members in there now, and just wanted to kind of do something for you guys and show you what that is like. So hope you enjoy it. Smash that thumbs up button on the video if you enjoy me actually sharing this with you guys here today, and share this out with somebody. All right, enjoy it. Well, howdy there, guys. I hope you're doing great out there. As always, got a lot to discuss in today's video. Anything you want to discuss, let's go ahead and discuss it in the Discord chat. As always, let me know if you guys made any moves in the market this week, any buy orders, any sell orders. Let me know in the Discord chat. Would love to hear from you guys as always. And with that being said, let's start getting into this. As always, let's start out here looking at the public account. So here's what we're looking at. Still 140 shares of Baba, up about 10% on those ones. Cruisy Doozy up 35% on 915 shares. Elf on a Shelf up 124% on 1,250 shares. Facebook up 21% on 371 shares. Fizzy Get Dizzy down 2% on 610 shares. iRobot, one of our newest, actually I think that is our newest position, right around break even on that one, 140 shares. Nordstrom down 7.7% on 370 shares. Skyworks Solutions right around break even, 650 shares. Tapestry up about 2-3% on 445 shares. Tesla right around break even, 150 shares, and Wynn Resorts right around break even, 123 shares. They're up about 36,000 in the account in total. Something I thought would be interesting is I want to show you guys like all the realized gains and losses as you guys have seen throughout 2019, but just in like a compact form so we can see it all in one place. And what we're going to see here, I want to talk a little bit about this, okay? So total gain on the year as far as stocks sold, $9,416 in this particular account, which let me just first off say for that number, that's a pretty decent number, being that this account is maybe, I don't even think it's 2 years old yet. I think it's approaching 2-year-old account. So I think as time goes on, the gains will get bigger and bigger as far as the sells, because you think about it like, you fast forward into the future, and some of these positions have been built for years, and a lot of the bullish thesis may have already played out for them, and so you get to sell for big gains. So if I look at, total what we've done basically in that account for realized gains so far, $9,416, I can't sneeze at that. I want to talk about a couple sells here that we've made in the account, specifically as far as the, ones that have, hurt us. US Steel and At Home Group, but I really want to focus in on US Steel and the Elf Beauty sells, okay? So, you can look at US Steel and say, man, that was a bad sell. In Elf Beauty, you can say, well, that was a bad, that was a great sell because you made a lot of money. And US Steel, you lost a lot of money. But actually in both those situations, I think inversely on that, okay? The US Steel sell was a phenomenal sell, because when we sold that stock, that was like a $23 stock, somewhere roughly around there, versus now US Steel's like a $10 stock or $11 stock or something insane, okay? So the amount of money we would have lost if we stayed in US Steel instead of just saying, hey, I think I messed up on that one, let me get out now, is ridiculous. Like that was one of the best sells I've ever had in the stock market, even though we lost a 4,000 bucks on that position. It was just a phenomenal sell. And then if you look at Elf Beauty, you say, man, that is so smart to sell out. You sold, look at all those profits. But a lot of those shares that were sold in Elf were sold in the $12, $13 range. And, now the stock's at $16, $17. And a lot of those shares, I wish I could, basically get back, and I wish I didn't sell them. So sometimes you will make, decisions selling stocks, and sometimes they might look like the correct decision or the incorrect decision, but sometimes sometimes ultimately in the end, you might have actually messed up, or you might have actually made the right decision, even if it looks like you took a loss. Because sometimes, like we talked about with US Steel, like we would have been down 5 figures plus on US Steel had we not cut our losses when we did and say we messed up on that one. I don't like that where the way that one's going. Let me get out now as a commodity stock. What am I doing messing around with commodity stock? And then with ELF, I just started selling those shares too early in my personal opinion. The company just had more upside, and the way they're reinvigorating that brand is just unbelievable there. So but anyways, that's where we're at as far as stocks that have actually sold. If we sold out the entire portfolio, we'd book another $36,000 in profit roughly. So then that would put us into a range of something like $45,000 in gains this year just from this one account. So definitely can't complain about that. All right. Now, the newest account we just started, what was that, a few weeks ago? That is the dividends only account. And so we only have 3 stocks in this account as of right now. Hey, it's only been around for a few weeks, so it's not like we're going to have a massive account going already. But JWN is doing pretty good for us, about 2.45%. Tapestry up nearly 10% already on that position in this account. And Whirling Resorts is up 4.67%. In the account in total, we're up just over 5% on that, which is really like a much better performance than I would have thought. Like this account literally is a few weeks old to already be up 5% on that. It's good. As far as like looking at this account from a longer term perspective, we got to always remember whenever, Fidelity accounts, basically does that total gain loss number, that's just on what the stocks are doing as far as the stock prices. That doesn't even factor in dividends. So in that, specific account with the dividends, we got to always add in a 3 to 5% extra gain for dividends basically in that account each and every year, because most of the stocks that will be held in that account will pay dividends yearly of about a 3% to 5% rate. So, let's say we get a 10% gain per year in that account in total. Well, really that was like 13% to 15% because when you factor in those dividends. So when I look at that account, I'm really excited. I'm really excited to see where it goes. I'm really excited to see if it underperforms or outperforms our overall, regular brokerage account. As I told you guys, I think the regular brokerage account will outperform the dividend account if we look on a longer term basis, but we'll have to see what happens. Like who knows, maybe the dividend account actually outperforms not only the stock market in general, but actually outperforms my regular brokerage account. We'll have to see. Time will tell on that whole situation, okay? Next thing I want to talk about here for a moment is At Home. So as you guys know, we decided to make the decision to, cut At Home, take the little loss on that one and say, it is what it is. The main reason was I just couldn't, sleep at night with the balance sheet. Well, I mean, it wasn't that bad where I literally couldn't sleep at night, but I was thinking about it way too much. I was thinking about this home position way too much and worrying about the balance sheet and all those sorts of things. And when you're in that situation, it's just bad, okay? But they're reporting earnings on September 4th, okay? Wednesday, September 4th, they're reporting earnings. And so, some of you guys are shareholders of Home. I know some of you guys have bought the stock. I hope you didn't just buy the stock because I was buying the stock. That's always a bad decision. Buy the stock because you believe in it. But I know a lot of you guys are shareholders, okay? And they got these earnings coming up this upcoming week, in a few days from now. And so I'm thinking like, if I'm looking at the quarterly results, we'll see what happens with that. If I had to guess, they're probably not going to be very impressive as far as, what they're going to report for this past quarter. But the one good thing for At Home at this point in time is they're going into their stronger seasons, okay? The fall and winter time is a strong season. Why? Halloween decorations, fall time decorations, Christmas decorations, all those sorts of things are what really drives a company like At Home. I mean, people go there for decorations and stuff for their house in general most of the year, but it's really a business that can thrive on those folks that are going in for Halloween decorations, fall time decorations, and Christmas decorations. That's just a massive, massive industry where people want to theme their home around Christmas and Halloween and fall time and those sorts of things. So that is the one really good thing for At Home if you're looking on a short-term basis, is they are about to go into their strongest 2 quarters, which is fall time into the Christmas quarter, okay? So that's good news for them, but they obviously still have the issues with the balance sheet at the end of the day. So we'll have to see what happens with that. I just want to kind of address that with you guys. Let me know if you guys are holding home shares in the Discord chat. I would love to hear from you guys as always, and kind of what your thoughts are around those earnings, all right? Ubery boober. Just want to talk about Uber for a moment here. It's getting more and more intriguing as the weeks pass. The stock continues to fall and fall and fall. It's down to, $32 level now. And so as I've told you guys, I'm very interested in Uber if it can start falling in the 20s. If Uber stocks falls in the 20s, guys, I'm going to have to start buying the stock, because at the end of the day, I see Uber as a massive cash cow business in the future, strictly because it's so hard for competitors to come in this space. And so if you look at like the US market, you have Uber and you have Lyft, and those are the only two guys competing at this point in time. And I think they both want to make a lot of money. And so they're both going to be able to raise the prices of rides over time, and they'll end up, getting to a place where they're very, very profitable. Uber Eats will continue to be a drag on the business for quite a while longer, because Uber Eats is losing like, $2 to $3 each time somebody places an order. It's losing a ridiculous amount of money right now. So that will continue to be a drag on the business. But when I think about the driving business, that's going to be a straight cash cow business when I look at the company overall, over time and whatnot. So I'm very interested in Uber, but the company has to, the stock basically has to drop more for me to really, once it gets into the 20s, which I think it has a very good chance of getting in the 20s this fall, with everything that's happening with, executives being able to start selling out and insiders and all those sorts of things, very high probability it could fall in the 20s, and I would be interested in starting to buy the stock, all right? Tesla, I want to talk about a few things around Tesla. So first off, Tesla Insurance officially launched in California this week. And as far as Tesla Insurance goes, big opportunity there. That is a really, really big opportunity, Tesla Insurance over time. If you really think about the insurance market overall and the type of data Tesla could specifically have, especially if it's Tesla insurance on a Tesla car, the type of data, and maybe you could give Tesla the data to your car. So basically it feeds, okay, they're driving this much, how often do they drive unsafely, and things like that. And it could feed, and imagine if then you get insurance rates based upon like what's going on with how you're driving the car, or if you have self-driving on the car, maybe you get a lower rate and things like that. So it could get very, very intriguing. This Tesla insurance business is not something that overnight I expect to be just a massive business. I think it's just going to be a slow build over time, and who knows, maybe 5 years down the road, 10 years down the road, Tesla could become one of the biggest players in auto insurance. We'll have to see. I'm not putting my eggs in the basket. Like, as far as my Tesla investment, it has nothing to do with the insurance business at the end of the day, or really mostly, it doesn't even really have anything to do with the energy side of the business. It's just, my Tesla investment, as you guys know, is around the mass amounts of electric vehicles they'll be able to sell over the next 5 to 10 years. But if you kind of think about it, like Tesla's trying to go, more and more the Apple, Amazon route when it comes to like vertical integration, and they want to do everything themselves, whether it's just selling you the car or superchargers or service. They're not trying to outsource anything. Insurance now, and they just want to go next step, next step, next step. And that's really how you build a really, really massive tech company. The more you can vertically integrate in the business overall, is the more you can grow that pie overall, guys. So, excited about that, but it's nothing that's making me go buy the stock or sell the stock or something like that. It's going to be intriguing to watch where it goes over the coming years, okay? Just something completely random I saw here. Tesla Model 3 actually basically is going to be used by a police force now, actually in Indiana, and they broke down the cost of this car, and it was actually far cheaper, based upon what the numbers they did, than basically the Dodge Charger. So I thought that was a pretty intriguing thing out there. Police forces maybe using Model 3s down the road. That could be a big, when you think about how many police cars in the United States of America, if the Model 3 could become like the primary player there, that's a massive, massive opportunity for the company overall. Once again, not a thing that's making me go buy the stock or sell the stock, but it is intriguing, and it is pretty cool to see something like that, okay? Rather than those gas, think about how much those police cars drive around. It's much better to just, be on electric. Another intriguing thing I saw this week was, look at this here. Somebody got video of another person in a Tesla car sleeping while driving, okay? These videos are always funny to kind of see. The one thing I will say about this is, Oh gosh, it's great branding for self-driving. It's the best branding in the world for Tesla. I mean, I don't say it, think anybody should go do this and sleep while the Tesla drives them around. But when you really think about it, this is the best branding ever. Whenever I hear these stories of somebody sleeping while their Tesla's driving them, it's like off the charts, like branding, because no one else even has like those type of capabilities in their car, right? So like the fact that the car is driving itself is like completely foreign to people. And when you have these attention grabbing things like somebody sleeping and the car's driving them, in my opinion, from a branding standpoint, it's really off the charts because, these things go viral and somebody's sleeping while their car's driving them and people are just like, what? And so Tesla, not only do they have the brand name around electric vehicles, they're the biggest brand name by far in the world when it comes to self-driving vehicles because a lot of these posts go viral. People are like, what? If people aren't really up on what's going on as far as like knowing that Teslas can do, much of the driving for you, maybe not all the driving, but much of it. If people aren't up to date on that and they don't already know that, they likely see one of these viral posts and they're like, wait, what? That car, it's a Tesla? It drives the person? How are they sleeping? What? And they start like researching and they're like, what? This car drives itself. It's branding off the charts, okay? I just want to talk for a second here about like the stocks I'm looking at the most in terms of, adding shares of. And this is kind of in order as of right now. The trading prices right now. Fizzy, that's probably the stock I'm most interested in buying right now as far as, adding additional shares. I could potentially add some Fizz stock maybe in the dividends only account, but I'm not sure if that one, constitutes as a dividend stock because they only pay once a year and it's not ever a guaranteed thing. So I'm like, if I add Fizz to that portfolio and they only pay once a year, does it, and who knows, maybe they don't pay. I'm not sure if I want to add Fizz to the dividends only account, but I am interested in adding more Fizz shares in my private accounts as well as the main public account there. JWN, definitely interested in adding some more shares there. And then iRobot, we just started buying that one. I'm interested in adding some more shares there, all right? Now we got to talk about Ulta Beauty for a minute, okay? Ticker symbol ULTA. Stock fell 30% today. Unbelievable, right? I did a video talking a lot about the stock. I just released it literally on Financial Education 2 right now. And I talked a lot about the stock and my opinion on the stock and whatnot. But what I didn't talk about was the earnings and what sent this stock down so big. So let's talk about that now, okay? So shares of Ulta Beauty obviously tanked after the company reported earnings after the bell on Thursday that missed analyst expectations and slashed its outlook for the fiscal year. The company said that the cosmetics industry has struggled as a whole this cycle because there haven't been innovative beauty routines that drive consumers to purchase products as much as they normally do. CEO Mary Dillon said she believes industry-wide challenges will continue in the near term, leading the company to lower its earnings and revenue growth guidance. And I will say, since I became an e.l.f. shareholder, I've become much more interested in the makeup industry and like looking at what these different companies are doing. And the makeup industry in general, you have, it's interesting, right? You have a lot of the old players there, the high-end players like the Estee Lauders. You have, the Maybellines and those cheap players, right, that sell into Walmart and Target and Walgreens. And a lot of these players aren't doing a lot of interesting stuff, let's be quite frank, okay? They're kind of coming out with the same product. And then you've had the influencers, the beauty influencers, whether it's Instagram people, YouTube people that have, flooded the market with their own products over the past couple years. And those will kind of breathe some innovation into, what was going on from the traditional standpoint. But overall, there's not a lot of like exciting stuff going on. But if I look at like what e.l.f. is doing and some of their product packaging and their marketing and whatnot, I'm like, that is really, really innovative. And I watch, people that their life kind of revolves around makeup and they do makeup videos and whatnot. And when they speak of the e.l.f. products and the things they were doing around some of their summer products and whatnot, they're like, it's such a breath of fresh air because the makeup industry can be so stale and it's just like the same products, the same look, the same feel. And you have e.l.f. doing some things that are really innovative in the makeup industry and it excites people and makes people say, I got to go, buy, the e.l.f. makeup because this is some cool packaging, this is a cool look, and this is a cool product, and it's affordable and things things like that. So I'm really impressed what e.l.f. is doing, but I can understand why Ulta, has some kind of negative things to say about the industry in general, because there's not a lot of innovation and excitement going on in the makeup industry right now outside of really e.l.f., okay? As far as the earnings went here, so adjusted earnings per share came in at $2.76 versus $2.80 was expected, so slight miss there. That's not like that much of a miss. I mean, 4 cents is 4 cents. Revenue came in at $1.67 billion versus $1.68 was expected. Another very, very slight miss. Same store sales missed pretty good. They came in at 6.2% versus 6.6% was expected. Now, that's an amazing number. Like 6.2% same store sales rise, amazing. Any retailer or restaurant that gets a 6.2% number, that's amazing. But when 6.6% was expected and you're a growth stock, it's not obviously the ideal situation, okay? The company lowered its earnings forecast to a range of $11.86 to $12.06 per share from a prior range of $12.82 to $13.03. It also cut its revenue growth expectations to between 9 and 12%. Previously, it said it expected low double-digit growth, kind of meaning like, 10 to 13% or something like that. So they brought numbers down across the board, EPS numbers, revenue numbers, everything there. That's why, it's a growth stock and it's in a retail industry. Retail, if people get any, sight of bad news around a retailer, these stocks get absolutely obliterated right now. Remember what happened with At Home? That stock went from 20-something dollars a share to $6 a share, $5 a share, like within what, two months time, 3 months time? Like it was ridiculous, right? Like that's like a 70% fall in literally a few months time. It's insane. It's absolutely insane. And you look at an Ulta stock today, gets a 30% haircut in a day. That's a ridiculous number. But when you're dealing with retail right now, any sign of weakness in these stocks get absolutely destroyed. That is what essentially happened here with Ulta. It's getting to an interesting point. Am I going to buy Ulta tomorrow? Absolutely not. Will I buy Ulta down the road? It is a potential buy. Great balance sheet, great management team, great overall business model, but the valuation is not quite there for me to say, yeah, let me go buy some Ulta shares or something like that, but it's getting much more intriguing, guys. If you want to talk about anything we discussed in today's video, let's go ahead and do it in the Discord chat as always, along with anything else you guys want to ask me over there. Let's go ahead and chat about it over there, all right? Thank you for watching and have a great day.